If you have $100,000 and you want to invest in Airbnb short-term rentals, what should you do? What steps do you have to take? How do you get started? In this video, I'm going to go through the different steps to take and what I would recommend if you have $100,000 to invest in Airbnbs. My name is Yiwei. I own and manage over 28 short-term rental Airbnbs in the Cincinnati area. I've been doing it for the last 4.5 years. And I own and manage a lot for different owners and investors from all over the country. So I'm gonna go through exactly what I recommend them as well. First things first is, how are you going to purchase this house with the $100,000? What kind of loan are you going to get? So unless you're purchasing a house for $100,000 cash and the house is worth $100,000 cash, the best way is to get a mortgage, so you can leverage that $100,000 to get a lot more money to purchase the house. With financing, take a look at the different loan products there are on the market for investment properties. There are more than just one type. So the very most common one is to do a conventional loan where you use your W-2 income, if you have a W-2, and buy an investment property. That is most likely going to require 25% down, some points, some other fees, depending on the lender. The second most common financing is a second home loan. And definitely look into the details of what the loan allows and don't allow you to do if it is a second home loan. I have heard that some second home loans don't allow you to rent the home out. So definitely look into that before doing a second home loan. But with a second home loan, the benefit is that you can buy a property if you're more than 50 miles away, and you can get pretty good down payment. You don't have to do 25% down. So that is one benefit of the second home loan. The third loan type to look into is a DSCR loan, which is the debt service coverage ratio. It is looking at the rental income of the house its own. Without your credit score, without your income, the property itself has to sustain itself. So it's looking at the ratio of what the rental income is to the actual expenses of the house, like the mortgage, the taxes, the insurance, etc. So look into which products you are going to finance this house with. That is very important because that is how you're going to calculate all your expenses, your monthly costs when you are evaluating a property for a short-term rental. Another note I want to make while we're talking about finances is there is more cost to do a short-term rental than if you're buying a typical long-term rental, because there's a furniture cost and there's a setup cost. So if the total amount you have allocated to invest total is $100,000 and it costs $25,000 to furnish this house as an Airbnb, you'll have to deduct that $25,000 from the total $100,000 that you have allocated. So if it's actually $100,000 and the furniture is $25,000, then you really only have $75,000 for the down payment and all the closing costs for that property. One tip I would like to add here is, if you are doing everything yourself, look into the different furniture stores who have that 0% APR for 12 months. That could be one way you can finance the furniture without going out of pocket. Now that we got the financing, the furnishing costs out of the way, the first thing to do is to figure out what you want this house to do for you. What do you want this short-term rental, vacation rental, Airbnb to do for you, your finances, and your family? I'm a big believer in start with the end in mind. Do you want to use this property as a vacation rental for yourself, for your family? Or is it just purely for investment purposes? Because if it's only for investment purposes and you're not tied down to a specific location where you want this Airbnb to be, then there are infinite opportunities in the US for you to invest in. But if you're like, I just want a place for my family to vacation, like by the beach, on the ski resort, in the mountains, wherever you are, narrow down where that market is going to be, because it has to be something you want this property to do. The property has to meet what you want to do. If you really just want a second home for yourself, there's no reason to go and invest only in a property that's going to make income. But if you want this to be a second home for you, where you are going to visit and travel to, then pick a market off of that, because that is the first thing to do. Is this will help guide you what market you should buy in. And each market is going to have different price points. So if you are buying in the Florida beaches, it's probably not realistic to look for a house that are $300,000 to $400,000. If you are looking to be in the Midwest or any place where you're not really tied to a specific location, you just want the numbers to work, then that would be a great area for you. So narrowing down the market is one of the things to do first. And that's going to depend on what goals you have for this property. So if you don't have any goals, you don't know what you want to do, it's going to be very hard to guide the investment. Because at the end of the day, you want to know, is this house doing what you wanted it to do for you? The second thing is, if you are not tied down to an area, you just want a market that is going to make money because you want that passive cash flow, or you want more cash flow than where it makes sense for you to invest in an expensive state, then there are so many opportunities for you in the US where you can buy properties at a very reasonable price and still be able to make that cash flow, and you're not tied down to a location. So it doesn't matter if it is in small town Arkansas or if it's in Cincinnati, Ohio, where you may not want a vacation at, but it is going to make that money for you, and that is what your goal is. So think about, what is the goal for you by doing Airbnb or short-term rentals with this? Having the end in mind is going to be the guiding factor for you on which market to invest. So if you want to be in the beach area in Florida, know that your purchase price is just going to be so much higher than a smaller Midwest city. And with that, you may choose to go with a second home loan because you could put less down and get more house with it. But if you're looking for the numbers with the higher rates right now, it probably doesn't make sense to put a little bit down. And with an investment property, you're more likely that you're going to have to put 20-25% down on this house. So that is going to be the guiding factor for you on location and price point. The other thing to note is you do not have to purchase in a vacation destination. So if your goal is to just have cash flow, and it doesn't matter where that property is, it doesn't really matter what that property look like, as long as you're getting the cash flow and the investment returns that you're looking for, then you don't have to buy in a vacation destination. There are so many cities in the US where it's not really places where people go for vacation, but there are so many other travelers coming to the area, and there's that demand for the area, and there's demand for people who need furnished rentals. So that is one of the things you don't have to do. Now we can work backwards to figure out how much money you have to invest and back into the purchase price. So if you're buying a second home and you can put 10% down, that is more house you can buy with less investment. But if you're buying in the Midwest with a investment property, you're probably gonna have to put 20-25% down and buy less house or less expensive purchase price. For example, in Cincinnati, you can buy a house for $300,000 to $400,000 that you can use as an Airbnb. And that is way different than in Gatlinburg, for example, where the cabins are $800,000 and above. So that is one of the bigger differences between a vacation market and a typical suburban market in the Midwest. After you have picked out the market and the purchase price range that you want to be in, and you have the financing already picked out, at least a general idea of what the different types of loans you can get, Then it's time to go to that market and find a short-term rental agent that specializes in short-term rentals to help you purchase a place. And it also helps to talk to management companies in the area who do short-term rentals, so that way they can help guide you as well in terms of what neighborhoods, what streets are good, what are some of the expected revenues you can make with this amount of purchase price in this type of neighborhood, or what kind of investments you have to make after you purchase a home. Like maybe you need to redo the bathroom, or maybe it's basically ready to go. So the agent and the management company are great to guide you in a market where you haven't been and you may not be familiar with the different area and neighborhoods. I would say that definitely look for an experienced agent, investor agent, and a short-term rental management company, because that is going to make or break your investment in that area. Why is it important to find an experienced agent who have or worked with short-term rentals before, or a management company that have great reviews with owners and guests with short-term rentals? Because it is so important to buy the right property. Because once you purchase a property, it is going to be so hard to change the location. It's going to be so much money you have invested in that one property that if it is not the right one and you've got to make all these changes to it, it is just so much more expensive at the end. So working with somebody who have the experience to know what is the right neighborhood, what is the amount of revenue you can get, what other expenses should you be looking for, or other tips in the area. For example, in Cincinnati, there are different places where you can have homes where you are not having to pay so much property taxes. And that is something that could really help you on a property. So like, for example, in Cincinnati, if you buy a property with property taxes, that is going to be maybe $1,000 a month. But the same price property in a tax abated area, you're only paying $120 a month. Like, that is a huge difference, a huge impact to your profit and to your cash flow. So knowing the insider tips of what works and what doesn't is so important when you're starting out, especially if you do not know the area, you don't know the neighborhoods, and you don't have a short-term rental there yet. So you're dependent on people's expertise to let you know what works and what doesn't. So that is a very important thing if you are buying out of state in an area where you are not familiar with. So to summarize, make sure the financing is right, figure out which type of financing you want to use, figure out which market you want to be in, and then with that, you're gonna get the total amount of money you can actually invest into this property at $100,000, or is it $80,000, or is it $75,000? Because we gotta take into consideration the furnishing costs, and then back into what that purchase price is. And also think through, are you okay with doing renovations? Or is that not something you can afford to do right now? So then you want something that is a lot more done at the beginning, where the home is ready to go at the beginning. Maybe some minor painting, flooring, etc. But there are a lot more investments up front for a short-term rental than there are for a long-term rental. So calculating the numbers, that is super important. Once you've found an agent and a short-term rental company who can help guide you in the neighborhoods, the next thing is to really calculate what are the revenue for this property you're looking for and what are the expenses for this property you're looking for. Figure out what number you want to see at the end of the month, at the end of the year. I think it's a lot better to spread it out over 12 months, because some months you might not make so much, and then some months you're gonna make a lot more. So on average, over 12 months, how much cash flow do you want every single month? Or what % return on your money are you looking for? All of this criteria up front is gonna guide you on where to purchase and what house makes sense for you. So we're creating a criteria for where you're gonna buy and what kind of property is gonna work for you. So one other tip as you're looking for properties and making offers is this might horrify some agents, but make 2 offers. Make an offer with the traditional financing, with your loan, your pre-approval, all of that. The second offer is make it with creative terms. Just make sure the agent is on board with doing this as well, or finding a investor-friendly agent will also help with this, because that way they can communicate the different financing options to the seller. And then making those 2 options, you never know what the seller is going to take. It might take a little bit longer for them to get used to the creative financing way where they're taking payments, or maybe you're taking over their mortgage. But always asking that question is so good if they say yes. Because what if they say yes? So what if they say no? We already have a backup plan to use your traditional financing. So it's okay if they say no. But what if they say yes? Then you don't have to go to the bank and you get these great terms to buy this house. So make 2 offers when you are making offers. That is always something to do. That is one of the biggest tips I give my investors. So once you're ready to make offers, good luck, follow your criteria. Do not give in to a house where you don't believe in. If there's something wrong about that house, it doesn't feel right to you, don't buy it. Move on. There's always other properties. There's always going to be something that fits your criteria, unless it's super unrealistic. But assuming that is a realistic expectation, then it's okay if you pass on this house. It's going to take time to find the right property that meet the right numbers for you, but it is so much better to have a property that is doing well, even if it takes a bit longer, than jumping into a property that ends up not doing good and not cash flowing, and you're like, what am I gonna do with this property now? It's a lot easier to start off with the right property than just trying to triage something afterwards.